Have you noticed a lot of the homes out there today need rehabilitation? Distressed properties such as short sales and foreclosures oftentimes need repairs. And the purchase of a home that needs repairs is often a catch-22 situation because the bank won't lend the money to buy the house until the repairs are complete, and the repairs can't be done until the house has been purchased. The Section 203K loan, FHA loan, was designed to address this situation. Even homes that otherwise wouldn't qualify for FHA financing, such as this one, can utilize the 203K loan. The 203K mortgage provides a long-term fixed interest rate, financing both the acquisition, which is the purchase of the property, and the rehabilitation or repairs of the property. To provide funds for the rehabilitation, the mortgage amount is based on the projected value of the property when the work is completed, so the as-finished value of the property. Let's take a closer look at this fantastic loan program. Say you have a home that's listed at $115,000, but it requires $35,000 in repairs. With traditional financing, that $35,000 would have to be paid out of pocket. If you're putting 10% down on a conventional loan, your total monthly payment ends up being $965 approximately. Your cash to close, $46,500. Another option would be getting a home equity line of credit for the $35,000 remodeling cost. That results in a higher interest rate, and where your cash to close is still the $11,500, 10% down payment, your total monthly payment, including your first and second, jumps up to $1,700. That's quite a bit difference than the $965 we were initially talking about. Now let's take a look at the 203K option. Financing the $35,000 with the purchase price, you get a total starting loan amount of $150,000. Take 3.5% of that, FHA's minimum required down payment of $5,250. Your cash to close is the $5,250, and your total monthly payment is right around $1,200. That's a lot more affordable than the $1,700 a month with the home equity line of credit, and a lot less cash to close than the $46,500 required with traditional financing. Beginning to see why the 203K program is so fantastic? Say you have a bathroom. They estimate $10,000 to have it remodeled. Adding that $10,000 into a 203K loan only increases the payment by about $50 a month. I can tell you, I would like to have a newly remodeled bathroom for $50 more a month, made to my liking. I know what you're asking. How do I get started? First, you should let both your mortgage professional and your real estate professional know that you're interested in potentially using a 203K loan to finance your new home. After you've been pre-approved and locate the property, with your real estate professional, you should make a marketability analysis prior to signing the sales contract. The following should be determined: the extent of the rehabilitation work required, the rough cost estimate of the work, and the expected market value of the property after the completion of the work. Your contractor can help provide estimates. When writing up the sales contract, a provision should be included letting them know that you have applied for the 203K financing and the contract is contingent upon the loan approval and your acceptance of additional required improvements as determined by the city, HUD, or the lender. You or the HUD consultant complete the work write-up and prepares the contractor bid packages to obtain cost estimates. The appraiser then uses the work write-up to determine the as-is and the improved value. After all that is complete, the lender reviews the application and the loan closes. Construction begins within 30 days of the loan closing and must be completed within 6 months or less. Remodeling isn't limited to required repairs. Some other improvement ideas including modernizing the bathrooms and kitchens, new carpet, tile, hardwood floors and paint, upgrading heating and air conditioning units, replacing the roof, windows, the siding, going green with insulation or solar heating, expanding the living space, added another bedroom or a bathroom. That's not to just say that you can go crazy with financing and improvements and remodeling. You still have to stick within the loan limits for FHA financing, which is currently $365,000 for a single family unit. It still has to appraise for that much, which is based off the surrounding properties. So it's off the lower of the two, the loan limit or the appraised value. You also have to allow reserves for things to go wrong. Like with this home, the water damage caused us to tear out all of the walls. Thankfully, we had reserves. In closing, here are some tips and tools. Allow extra time to close. Typical transactions average 30 to 45 days to close. With the limited lenders and the extra paperwork, it's not uncommon for 203K loans to take 45 days to 3 months, depending on the scope of the project. Ensure your professional, real estate, and mortgage are experienced with 203K loans. These loans have extra paperwork, contractors, and sometimes repair funds. There's a lot of factors and people to coordinate to ensure an on-time closing. Use the HUD website for detailed 203K information and current FHA limits. On HUD's website, you can also search for HUD-approved fee consultants. Now, I've gone over a lot of information here. Feel free to contact me directly to go over the process and to also find out about the different areas that offer repair funds. Those repair funds are designed specially to be used with the 203K loan and are forgiven after you've lived in the home for a certain amount of time. So call me today while interest rates are still under 4% for this fantastic loan program.